So, Mike, welcome to F.A.C.E. I'm going to make you the presenter, and looking forward to hearing your voice and seeing your screen and having a conversation with you, my trading warrior brother. Thank you,
Dale.
Blake.
Thanks for having me on.
Oh, Mike, it's a pleasure to meet you. There is a drop-down menu, okay?
I already got it. I think my screen should be coming up here.
Yeah, so I wanted to clarify, because I saw your tweet. People ask you if you're related to Bob Pisani, and Bob's a reporter. There's a big difference between reporting and trading. Reporting is what happens after the fact, right?
Yeah, it is. You know, Pisani, for what it's worth, is like Smith in Italy. It's a very, very popular last name.
All right. Well, you know, on Twitter, though, I do see a picture of it. Looks like, you know, options action or fast money with Guy and Brian. Is that you in the middle?
That is me in the middle.
Okay. Okay. So cool, man.
I get invited on something like that, and it's a fun to go down there, and you know, Guy was great, and it was just a lot of fun.
Okay, Mike. So why don't you tell us a little bit of how you got from point A to point B in this business? Perhaps start with your first foray into it. How did it happen for you, or should I say to you?
So for me, I was finally starting to make some real money in sales, and it was just after the financial crash was just ending, and I was watching that market through that whole time and just fascinated by it.
Okay.
And just after
what kind of sales?
I was doing healthcare sales. I sell analytical software to health insurance companies.
Okay, cool.
Mostly fraud, waste, and abuse, which is interesting in the market we're in.
Okay. All right. So did you gravitate towards those types of stocks because you had that background?
No, I just started really getting fascinated, and I was watching names like GM and Ford and Starbucks and Citigroup. And I felt like these things were just completely oversold, and I knew some of them wasn't going to work out, but I started my first investments, and I basically threw a lot of money at that, and obviously on GM I lost it all. But everything else was a huge win, and I got into my first triple leverage fund shortly after that into the SSO and F.A.C.E, and started playing with those, and obviously they all ran back up.
Right.
And I started realizing the power of leverage, which started getting me to look at options.
Okay. All right. So I've traded my share. I knew enough to be dangerous. I didn't know much of the Greek of it. And, you know, like most people, I was just a buyer. You know, I didn't really understand the writing game, and always felt if I, you know, sold something against my long position, it would cap my gains, and I was a greedy guy and I didn't want to do it. So tell us about your experience in options, and are you self-taught, or did anyone kind of show you the way, bro?
A little bit of both. I spent a lot of time following people on Twitter and in a couple of different people's rooms out there at different times and learning about options. But ultimately, I found that the best way to do it was just to sit there, try different things with small scales, and learn what works, what doesn't work, and then, you know, just start studying. There's lots of books out there. There's lots of information out there. You can Google it out there. There's so much information for free now that we never used to have before.
Right.
You know, you don't need to have somebody be an expert, but then you have people like me who can teach you the very basics and stuff quickly and easily and get you up to speed in very fast, you know, in very short order these days.
There are a lot of charlatans out there too. Did you know that talk about, you know, 1,000% gains, which, you know, is all blue sky and don't represent risk either. So,
you know,
how were you able to discern?
1 cent option, right?
What's that?
I can easily make 1,000% trade on a 1 or 2 cent option.
Yeah, right. And the spread is what?
Yeah.
Anyway, so who were some of the guys that were influential that helped you?
Bob Lang, who he's been on Jim Cramer a bunch of times. I hooked up with him. He was a friend at one point. Wall Street Jesus, another guy out there who I learned a tremendous amount from over the years, just listening to him and just watching what he put out there.
Interesting.
Those type of guys, they know their stuff, and if you listen to them and you don't just blindly follow, but you listen, you ask questions, you learn stuff. And I think that's what I would encourage everybody is, if you're in a room like here or anything, ask questions, because if you don't ask questions, you're never going to learn.
Well, you do mentor.
Yep.
You know, I notice, and so you're a teacher. I could tell you're a natural one. Have you found that people, you know, people that want to sell the secret to trading, like it's an indicator or it's, you know, a cross or whatever it is, that most people are too lazy to put in the time that it takes to persevere and live through adversity to make it?
I hate to say it, but yeah, I agree with that statement.
Yeah, people just want money to drop into their account, and if you want to be a discretionary trader, don't you have to spend years to make breakthroughs?
And you have to have hard losses and hard lessons, and recognize that the market's constantly changing, and you have to change with it and adapt to it. And you know, people want trade monkeys, I think, Dale. They want somebody to just follow blindly in and out of trades, but then they have nobody to blame but that person they followed when things go wrong.
That's one reason. And what do they do when that person is on the Grand Cayman Islands and doesn't deal with retail or the public anymore? They're lost.
Yep.
They have to find someone else to coattail.
What I try to do is teach you how to trade. You know, I give you lots of ideas and setups every day, and the action and the heartbeat of the market, and try to teach you how to make the decisions for yourself. You don't have to follow me in and out of a trade. I'm giving you the setups. I'm telling you what they're buying and what they're going after that day. It's up to you to get in, manage your trade, and get out, but I will help you. I will tell you what you should be doing if you're going along the way. You should be moving your stop up. You should be taking some profits here, right, if you're in it. But you have to learn how to manage it. And I want to be honest with you. 2 days ago, I told everybody in my service to be very careful, because the market to me was starting to flash some serious warning signs that things may not be as peachy as they've been. I've been bullish since just before Christmas.
Okay, nice. Okay.
Now, I don't think we're going to fall apart here, my friend. I think we're going to get a nice little, 3 to 5% pullback, but it's about recognizing when the market flashes signals and teaching that to people. And I give them the same stuff, and it's not an indicator. It's everything's for free. Anything you want in the market, it's all out there.
Let me ask you this: is a major part of it, and I've heard it from several option traders before, is following size and volume in certain strikes and individual issues that are a tell for you?
Yeah, what I particularly like to look for are momentum sweepers into a name. So, we didn't really have much of it yesterday, but you see names like J&J was a good example yesterday. And let me pull this up for you. J&J, dipped and got this big pop, and they came after the May 24th 143 calls hard into the bottom. And not one big order, but they were sweeping it relentlessly, like 200 to 300 at a time. Now,
that's sweeping. Okay, so that's a new term for me too. So sweeping is not a guy coming in with buying 10,000. It's consistent order flow of smaller size, accumulating the volume and open interest.
What it really is a sweep is somebody that wants to get those options as fast as possible. So instead of going and negotiating a rate with a single exchange, like a large block, they go across every exchange to fill as quick as they can. So, they'll go out there and they may get 100 from one exchange, 50 from another, whatever it takes to get to that number they're looking for. Can
you trade options in dark pools like you can equities?
No, I don't believe you can trade options in dark pools.
Okay, so there's no, because I've had someone on who, they get their signals from what they're seeing in dark pools because they don't have to report the position for 24 hours. So you don't get that edge in options. So it's more immediate. The market is showing its hand when you see sweeps.
Correct. And, what you look for if that continues, and you'll see it on days like Apple yesterday. There were small sweeps constantly yesterday into the weekly 215 calls as it was going up, right? And, when they keep coming as it's going up, they're still interested. And when you keep watching until it stops. And then you watch when you get a dip if they come back. If they come back, that usually means they're not done.
Did they?
Nope. They did not come back.
Yeah, because it was even though it was still an up day, the candle was kind of negative, don't you think, on a daily?
Actually, I I disagree. I thought it was, well, a little bit. It came back in. It was a little extended, a huge move. But you're right. If it should have held the top half of that candle, if it wasn't going to be any good. You're right about that. It gave back more than I would have liked to have seen if we were going to get that.
Yeah, I mean, everyone who went for it, the first few hours of trading come in underwater today.
Correct. I mean, you know, but it's a heck of a lot better than the daily candle we got on AMD yesterday.
Sure. All right, so that's a great point. You bring it up, and I believe this is one of the most important parts of trading, and I want to know how you do it in options. It's identifying the relative strength and the relative weakness, and if you do that and your timing isn't perfect and you're shorting the relative weakness, it's usually more forgiving than if you're shorting the relative strength. So do you have some kind of screen based upon relative strength rankings or something for your preferred longs strategies and options and preferred bearish strategies and options?
So what I use is different things like the put to call indicator. Let me pull it up here for you. You guys can, I'll give you the link for this if you want. I post this once a week out there publicly. And what this tells me is when it's above 1.75, the market sentiment's getting too bullish. And that means they're buying too many calls on the market. When it gets down below 1, we're getting too bearish. That means sentiment's going the other way. And I use this as a contrarian indicator, Dale, right? Mm-hmm. So of late, we've been the market's been stuck in this bulled up mode for the last month. And that's a sign of beginning of FOMO, fear of missing out, that we see. Yeah. And I get very cautious or look at shorts when we keep getting up here. And when, like, you know, this December reading, see how low we were down here? That's when I'm looking to get long the market, right? Big, you know, not just day trading, get long, because these are deeply, deeply negative readings that you usually don't get unless there's a crisis going on. And we didn't really have a crisis back in December. You know, so
we had the fear of one.
Yes.
More gloom without the doom.
Yeah, correct. I like to use this because this gives me an idea of which way the market's leading from a sentiment perspective. And I always feel that when sentiment gets too big one way or the other, we're looking for a smackdown.
Okay. All right. Do you believe that there are still stop hunts in the market? You know, it used to be open outcry. When you started, there was still a little bit of open outcry. How do you use, I have a question from the audience. Scott Henderson would like to know, how do you find momentum sweepers? You have criteria for that?
I do. I have. I use Trade Alert, and they're great software. They're a little pricey, but for me, it's more than worth it. And I have my own custom solution, but I look for sweeps of 250 or more constantly coming in, and I just look for consistency on it.
Okay. Okay.
And they'll stand out, and you look for them in the same name over and over and over again.
Okay.
So on a day like when AMD is humping, you'll see them come in 60, 70 times.
Okay. Thank you so much. Scott says thank you.
You're welcome.
Thank you, Mike. Mike, do you use stops on options? How do you know when you're wrong? Do you just get out of the way, or do you actually have a physical order in to stop yourself out of an options trade?
So both. Let me go back to your previous question. You were talking about, do we see stop hunting this market?
Yeah.
I see it all the time.
Right.
You put a stop in on common. I love to trade common off options flow sometimes too, because you don't take you don't have the IV games that take place, the implied volatility. But you put a stop in, and you immediately see them take you out to the penny and turn around and go the other way.
Liquidity, going for the liquidity.
Absolutely. And in fact, you see all these little games, this market right now is full of it. But to put it on options, how do you do it? Typically, depending on my time frame, if I'm on a longer term option, I'll put a stop at around 50%. Okay. If it's 50%, I'm wrong. The delta's not there. Everything's wrong at that point. Now, what happened to J&J yesterday is I got green, and all of a sudden, you see how this on the 5-minute chart, the stock was going sideways?
Yeah.
The options started dropping like a rock. And that was the market makers playing games, and they dropped the implied volatility. So as soon as I saw that, I made a decision. I lost about 30 cents on my options, took the hit, but rolled out of that strike to June 145s and bought more time. And now I have a 50% stop in on that one. Okay. So when you see something going on there and you're getting hit and the stock's like this, something's going on, get out of the way. obviously that was just, whatever I did yesterday was wrong. I took a loss on it, and I'm up on the June 145s now. So whatever was going on there, you put a stop in place. The worst thing you can do is just sit in something and just let your entire premium go to zero.
Yeah, I've done it.
Yeah.
So that brings me to something. We learn the most from our mistakes. What was your biggest mistake, Mike?
2014, 2015. After 2014, after a huge year, I tried to trade exactly the same way with options and gave a tremendous and almost all of it back before I figured out that you can't trade every market exactly the same way. And that for me was my first big eye opener. That for me was the learning a lesson that you have to adapt to markets, change with them. And when the market changed, remember how choppy we got in 2015, 16, very sideways?
Yeah.
You couldn't just sit in options. And that's when I learned that you didn't just keep buying and sitting in them and letting them go to zero. And I learned that lesson the hard way.
We all do.
Yep.
You know what a friend of mine used to say to me? Dale, how many times do you have to get hit in the head with a ball peen hammer to know it hurts?
Yeah. So
for me, it was about 5,000 times.
We're wrong every day, right? I don't know about you, but almost every day, I don't take a setup that I should have, or I take one and I let it go too far and take a small loss on it. But overall, you're going to be wrong in this game. It's accepting that. It's keeping your losses small and not letting them get away from you, and trying to take the emotion out of this if you can.
Yeah, it's all in our heads, isn't it?
Yeah.
So what's in Elon Musk's head? You wanted to talk about. There's always a lot going on there. Will he be leaving for Mars if Tesla trades under 200, or what do you think?
Well, I don't know. We're trading up. We're up at 250 right now, just shy of it.
Nice recovery.
Well, Elon Musk. I mean, I think he's brilliant, but he's kind of like our president. You just wish he would just stop talking.
Yeah, good luck on that one.
Yeah. So they did a secondary today. After saying forever we don't need a secondary, they're doing 2.2 million plus shares.
Diluting.
And why it's up here? It's because it's up now almost $20 off the low. Well, he's buying 42,000 shares or so of it.
Himself.
Yeah.
Of the how many? And that was enough to get the crowd to go along with it?
Well, I look at it this way. On a daily chart, this stock has gotten pretty oversold down here, right?
Yeah.
We've had a long move. In fact, I was pointing this to people out. If you look at the last year, ever since that 420 stuff, this stock's been a disaster. And you can see this consistent downtrend, right? When you look at the chart, coming in, and it was just oversold here down this 230 area. I do think this is a long-term short, my personal opinion. But I told people yesterday I wouldn't be shorting it yesterday. Let it reconnect with the 8-day. Let it find some place where you can at least make a educated bet with a stop loss behind it. Because right now it's in limbo. So, here it's through the 8-day, it's all the way up to 250. So if it gets to 260, that would be a place where it broke down from. That would be a place that if you liked it short, I would try to short it. And the options market has been all over long-term, way out of the money puts on this thing for the last week and a half.
Okay. Why an 8-day MA? How did you choose that?
I used to follow Scott Redler, and I learned a lot watching him. And for me, I found that the 8 EMA works. It's a very fast-moving average. For me, I have momentum. If a name's above it, we have momentum. If we're below it, we have less momentum. So, one of the things I've been talking about here in the S&P 500 is this beautiful trend where we rode the 8-day all the way up here. And for the last month, we held it, right? And yesterday was the first close below it we had since all the way back here on the 28th. And so, what I always do is I'm learning from everybody.
Yeah. It's called intelligence gathering. Why do you think you're here?
Yeah.
We learn from everybody, Mike.
Always. And if you want to have a long time in a career in this game we do and what we love, you have to be learning every day.
Growing or dying, from Mike Pisani. So, Mike, Tesla, and you're getting some warning signs in S&Ps. Any other instrument you'd want to wrap it with?
Sure.
That you want to talk about?
Sure. So, you look at all this here, and by the way, at the S&P, my target right now is probably 2840 would be my ultimate, would be where we pull back to and see if we held that gap or just filled it reversed off of there.
Okay.
I like to use the SPY only because it has volume. The S&P doesn't.
Yeah, what kind of volume did we have daily yesterday? I interviewed a guy who said if we have the same kind of volume that we had on March 22nd and it's a down day, it doesn't look like we had the same kind of volume.
No, we were.
I'm looking back at March 22nd, and yesterday it looks like it might be 60%. So you really didn't have the volume on that decline that you needed.
But it was a tale of two tapes yesterday, and in the morning it was extremely low volume. I believe coming into lunch we were at like 16 million shares through the first 2 hours.
Okay.
And then post Fed it was obviously volume ramped up. Which is not, this is normal, right? We're not talking anything unusual. But to your point, yesterday is not the type of day where the type of volume where it gets me nervous beyond belief that we're going to crash. It wasn't one of those 150, 200 million share days. It was 70 million, right?
Right.
That doesn't get me worried.
Okay.
One last thing I would point out, these oscillators, they're very good for helping you get to when you're overbought and oversold. So like the NIMOT, here, which is, I keep this up all the time. I'm looking at this on a daily basis. When you get a reading that is negative 200, you're usually likely to get a nice oversold bounce. Likewise, when you get a reading that's over 200, you're considered overbought. We got a very overbought for a while on this bounce. But what I like about this here is we're already negative here on this pull, which tells me that we're going to quickly get into oversold if this market pulls. So I don't see a deep sell off quickly here without some news. And ultimately, I was listening to you guys earlier. I do think we get a China deal soon, and I think ultimately that will give the market a reason to come at, take out the all-time highs, and then we see. You know what I mean by then we see?
Yeah,
then we
sure
see.
I do. Sure I do. Let me ask you this: looking at those last indicators, how do you know the difference between what is going to be a low or a high for just a bounce, like you said, or that it could end up being a major inflection point?
What I do is I look at, as we're approaching an overbought area, I watch the way the market option flow is coming in. So are they still extremely bearish, or are we starting to see some big bullish bets come into the market where they're coming into the S&P 500, say, and buying, $1 million or $2 million in upside calls? Or are they still coming in and heavily hitting the put side? Does that make sense?
Yeah, money talks and bullshit walks.
Yeah.
Okay.
So you put these things together, right? It's kind of, I use these to try to give myself an overall view of what's going on, and then obviously price action being the most important driving.
Okay, one more question from Scott. Do you have a favorite delta and why?
So Scott, the answer is I like to stay between 30 and 40 on delta on most names because I can get the move faster out of it, but it depends upon the name. So it depends upon the stock. So on Amazon, I'll take a 10 delta or a 12 delta because this thing can move 40, 50 bucks in a day, right? But if I was going to trade a GE, for example, I would do a delta of 50 plus because it's not going to move more than $1. And I'm going to look at that. So if you see right here on my charts on the daily, I always have this ATR up, right? Average trading range,
yeah.
Right? That's your trading range, right? So I know that, GE only moves 30 cents in a day. So if I want to play that, I want to be more in the money where if I'm in Netflix, right, I'm willing to take less delta because I'm going to get a $10 move if I'm right. Does that make sense?
Scott, that answer your question? Anyway, well, Scott's answering. He said perfect. Why don't you be a good time right here, Mike, for you to go to your website for people that have an interest in learning from you and following your ideas. So a good time for us to turn this over into the best way to contact Mike Pisani, Ad Options Mike. So there's Mike's website. What's the address, Mike?
It's smartoptiontrading.com, Dale. Thank you. And if you come in here, first of all, I have a free newsletter once a week. I don't send out a lot. I'll send out a weekly video of a recap of the week. It's free every Friday afternoon.
All right.
Okay, that's the only time I bug you guys. I don't come out and send you out deals or anything to offer you.
Okay.
And if you're interested in real-time option flow, you come in here, you sign up. every day, first of all, you get all the flow throughout the day, news, events, setups, but it really starts off for me in the morning. Every morning I do a video, it's about 10 minutes long, telling you how I feel about the market that day and what I'm looking for, names I like. I'm live with everybody for about 3 hours a day in a chat room where we come in, you can interact with me. Every night I do a recap video talking about the action, what's good, what's bad, what do I feel about the market, what's swingable. And then once a week, I do a mentoring webinar for all my subscribers where this is your chance for any questions I can't answer during the day because, during the day, I'm trading.
Yeah.
All right, we come in on Thursdays and we do a half-hour, 45-minute session.
Okay.
I trade for a living. I charge $25 for the first 30 days, $100 after every month thereafter if you're interested. So, and if you have questions, you can't hit me there. You could also come get me at Options Mike on Twitter. I'm very interactive there. If you send me a direct message, you'll get a quick response.
Mike, I'm so glad that I found you on Twitter and that our paths crossed. And like it or not, you're now my trading warrior brother.
Like it, I love it.
Is that okay?
It's fabulous. I appreciate you having me on and anytime.
Okay, and I really appreciate you taking time out of your day today to edify the F.A.C.E community. And my hope for you and all your mentees is that money just drops out of the sky like a thunderstorm for you going forward, and wish you greater success than you've ever had before.
Thank you, Dale. Thank you, everybody here in the F.A.C.E community, and my same to you. You guys have a great trading day. Make money. Be wary of the market here, and it'll figure itself out.
Thank you so much, Mike. That's a wrap. I have one question from Arnie Day asking about the reimbursement program. Arnie, if you're still here, the reimbursement program is if you go to our sponsor, they'll set you up with a broker, and you should have this anyway, where just your trading, the reimbursement will pay for the subscription, or you get a rebate check. So if your broker's not doing that for you, contact Forest Park FX. And Mike, thank you so much for being here. Everyone, we have NFP tomorrow. And you know what? One of my favorite guests is going to be with us tomorrow, David Brady. How many that are still here like David Brady at Global Trading Pro? So we're going to wrap the week with some great action with NFP and an excellent interview with David Brady. So until then, remember, don't just count your pips, count your blessings. And me and the team will see you tomorrow to wrap up the week. Adios. And good hunting.